It is 8:14 a.m. Pacific Daylight Time. It is the 20th day of May, 2026, and this is episode 1325 of Bitcoin, and we're going to just cold start today with all the news that you can use about Bitcoin and macro from around the world with me, your host of the Bitcoin and podcast, David Bennett. Let's just kick it all off with this Prime Trust thing again, because it doesn't seem like the Prime Trust estate is stopping with suing Swan Bitcoin. Now they're going after Strike. Seems there's a lot of contagion here, or at least more contagion than I actually previously thought. This is out of Coinpedia, and its headline is Prime Trust Estate sues Strike over $29.5 million and Bitcoin withdrawals before collapse. This is almost the exact same story as what's going on with Swan. Let's find out the details. According to a newly filed complaint, Strike allegedly withdrew nearly $29.5 million and almost 2,000 Bitcoin from Prime Trust during the company's final weeks before bankruptcy. The filing specifically highlights a large 1,350 Bitcoin transfer that reportedly took place on June 2nd, 2023, shortly before regulators moved against Prime Trust. Prime Trust estate claims that Strike executives recognized signs of serious financial and operational problems inside the custodian before the broader market became aware. The lawsuit argues Strike received preferential treatment by rapidly moving customer funds away from Prime Trust while other users remained exposed to the platform's collapse. Court documents also reference Strike's own bankruptcy claim filing, where the company reportedly admitted taking actions, quote, to protect its own and its customers' interest by transferring funds into an external account. Prime Trust was once considered one of crypto's major custody and infrastructure providers, servicing exchanges and fintechs and digital asset companies. However, the firm collapsed in 2023 after Nevada regulators accused it of severe financial mismanagement, missing customer funds, and operational failures. The company later entered receivership before filing for bankruptcy. The collapse triggered widespread concerns across the crypto industry because many companies relied heavily on Prime Trust for custody and settlement and infrastructure. Prime Trust estate is now seeking to claw back at least $13.9 million alongside 1,758 Bitcoin through the lawsuit. The case centers around U.S. bankruptcy rules that prohibit companies nearing insolvency from favoring certain creditors or counterparties over others before collapse. If the court sides with Prime Trust estate, the lawsuit could become another major precedent for how crypto bankruptcies handle large institutional withdrawals made shortly before insolvency events. The legal battle also highlights growing risks around centralized crypto custodians, where operational transparency and liquidity management remain critical concerns for both institutional and retail users. So that ends the article. But what's not said anywhere in here, at least in this article, now there may, in the court filing itself, maybe there's language, but what I'm not hearing is that Strike had some kind of, insider information. This looks to me like Strike, and I'm kind of saying this about Swan Bitcoin too. You know, I know that Strike and Swan kind of hanging out with Prime Trust was really rankling for a lot of people for reasons that I don't want to get into. But be that as it may, this whole thing looks like now in Swan's case, the case centers on that they had an insider that was feeding them non-public information. If that's proven to be true, that's a problem for Swan Bitcoin. I'm not seeing that language here with Strike. What it looks like to me, excuse me, um, what it looks like to me is that Strike was able to recognize that there was an internal problem with management and operations and liquidity inside of Prime Trust. And they were like, punch out. We protect ourselves. We protect our customers. We understand, we can look and we can see that there are problems. And we're getting nervous and we're pulling out. Would you sue somebody like Warren Buffett, who says, you know what? I just don't like the way Chevron is being run. I think I'm going to dump my I'm just going to punch TF out. I'm just going to get out. But, and then say that Chevron does have a problem and there's a major issue inside the company. Warren Buffett was maybe able to just see it, sense it, gut feeling, looks at financials. There are signals all over the place that will tell you, if you're looking and you know what to look for, what the hell may be going on inside of an investment or some kind of fiduciary that you're dependent on or working with or whatever. And you're like, dude, you're screwing this up and you're going to end up collapsing. I mean, Nevada regulators accused Prime Trust of severe financial mismanagement, missing customer funds, and operational failures. That severe financial mismanagement that the Nevada regulators cited, if it's severe enough, outside people are going to see it without insider information. So I think at this point, Prime Trust Estate is just going after anybody that they can. And I think that this is really, honestly, just bad behavior on the part of Prime Trust Estate, at least as far as Strike is concerned, unless there is language that says Strike had an inside guy over at Prime Trust who was feeding them non-public information as well, in which case, if it's the same guy, if it's proven that is true, and it's also proven that it's true in the Swan case, and it turns out to be the same guy, I want to know who this guy is. Yeah, what was he expecting to get out of Swan and Strike for feeding them non-public information before it became public? I don't know. In the case of Strike, I haven't heard language anything like that, so I'm just going to think that Jack Mallers and crew was like, dude, we're getting out. And speaking of pulling out, Trump-backed Truth Social pulls bids for crypto ETFs. Braden Lindria from Cointelegraph says that asset manager Yorkville America has requested the withdrawal of multiple crypto exchange-traded fund applications filed on behalf of the Donald Trump-backed Truth Social after changing its product strategy. Yorkville said Tuesday that it is moving away from offerings registered under the Securities Act of 1933, such as the proposed Truth Social Bitcoin ETF, to structures under the Investment Company Act of 1940, saying that the shift would enable it to offer more innovative products while benefiting from stronger investor protections and tax efficiencies. Oh, yay. Yorkville America's Truth Social Bitcoin and Ethereum ETF and Truth Social Crypto Blue Chip ETF were also withdrawn. The asset management firm said that it initiated the process after determining that the 1940 Act framework provides a structure for delivering the differentiated rules-based investment strategies that the firms continue to develop for its growing investor base. So all that's happening with, and I've seen a lot of chatter on both Nostr and Twitter and a couple of other places where it's like, oh man, Trump's getting out of the Bitcoin ETF. That means Bitcoin's dead, whatever. No, it's just that they want to do it under a different structure. So they've got to pull their applications under the 1933 structure so that they can reevaluate everything and rewrite all the applications to go under the 1940 structure. But I guarantee you, 90% of everything that you're going to see in social media is that Trump hates Bitcoin, Bitcoin dead. It's just another piece of FUD because they're not telling you the whole story. Let's move on to Telegram. Well, there's a Telegram group at the center of the Jane Street insider trading allegations in the Terra Luna collapse. This is out of CoinDesk, and Sam Reynolds is writing. Jane Street Group, one of Wall Street's largest trading firms, allegedly used a private Telegram back channel with Terraform Labs insiders to dump $192 million of the doomed Terra USD stablecoin before its collapse of May 2022, according to newly unsealed court filings in a Manhattan federal court. The complaint, brought by the administrator who is winding down Terraform's bankruptcy estate, was amended last week with fewer redactions, revealing some new details about how Jane Street allegedly obtained non-public information as Terra's ecosystem unraveled. Jane Street denied the initial allegations filed in February as desperate and baseless, and then asked the court to dismiss the case. According to the complaint, Jane Street's edge allegedly came through a private Telegram back channel between former Terraform intern Bryce Pratt, who was then working at Jane Street, and his former colleagues inside Terraform Labs. The estate says that access helped Jane Street dump the UST positions near par before the algorithmic stablecoin fully collapsed, and then build short positions that generated roughly $134 million as Terra's $40 billion ecosystem came completely apart. In one internal exchange cited in the complaint, Pratt is said to have joked that colleagues should be slightly pleased about having an informational advantage. This sounds like they've got him armed with that edge. Jane Street allegedly sold its entire UST position on May the 7th, 2022, exiting roughly 193 million tokens. Its largest trade, an 85 million UST sale on decentralized exchange Curve Finance, if you remember that name, came just 9 minutes after Terraform quietly withdrew $150 million worth of UST liquidity from the exact same pool. That trade matters because public postmortems of Terra's collapse have long focused on a large curve swap that helped push the token off of its $1 peg. The lawsuit now alleges that the wallet belonged to Jane Street, when a crypto analytics firm later told the Jane Street contact that the firm had made a killing. Internal communications cited by the case show traders worrying about how their wallets had been identified and then discussing how to, quote, decommission them. Quote, this suit is a transparent attempt to extract money when it is well established that the losses suffered by Terra and Luna holders were the result of a multi-billion-dollar fraud perpetrated by the management of Terraform Labs, a Jane Street spokesperson said. Quote, as demonstrated in the motion to dismiss filed in court last month, we will defend ourselves vigorously against their baseless, opportunistic claims, end quote. The suit also names Jane Street co-founder Robert Granieri and trader Michael Huang. It alleges violations of federal securities laws and the Commodity Exchange Act and seeks disgorgement of profits to pay back creditors. A 2023 federal court ruling in a separate Securities and Exchange Commission case found that UST and Luna qualified as securities, a finding that strengthens the new complaint's legal footing. On May the 18th, just 5 days after UST hit rock bottom, Jane Street offered Terraform's head of research a job. He started 2 weeks later, according to the complaint. I don't know, man. I think Jane Street was definitely doing some dirty dealing. And if you don't know who Jane Street is part of another story in Bitcoin called the 10 a.m. dump. And if you don't quite know what that is, for a very long, long time, there was I think it was around 10 a.m. in the morning, Eastern time, I believe, which would make sense because it's Eastern Seaboard. That's where New York Stock Exchange and all that shit is. That the price of Bitcoin would just dump for no apparent reason. There wasn't any macro shit going on. This is before the yield curve started getting blown out all over the place. That started last Sunday. Everything would just be normal. And all of a sudden at 10 a.m., and I think it was one particular day, but it may have been every trading day of the week. I can't quite remember, but I remember 10 a.m. and it would dump. And it just kept doing that for months and months and months. And then it would come back up and everything would be fine. And we'd go to the weekend and then it would the cycle would start all over again. Allegations started coming out about 2, 3, maybe even 4 months ago that this had everything to do with the Jane Street traders, that they were the ones that were perpetrating this to manipulate the price of Bitcoin. That's the allegation anyway. There's no lawsuit on that. But what we just talked about, this CoinDesk article, this is a functional, physical, standing lawsuit, or at least allegations that may result in, because it looks like they've got them dead to rights. I mean, they know the guy's name, this Bryce dude. They know exactly the timing, and it looks like they found actual Telegram group chats that kind of confirm that this relationship and this transmission of non-public information was being made through insider information out of Terraform Labs directly into Jane Street. And even if they didn't, Terraform Labs was flashing red, sort of just like we were talking about with Prime Trust. It wasn't exactly a hidden situation, but Terraform Labs was able to keep the lid on it in a much better fashion than Prime Trust was. Still, though, there were flashes of red from Terraform Labs, and people start, because we could see the peg start breaking, and then would come back up, and then it would break again, and then it fell completely apart over the course of like 24 hours. But if the federal courts can prove this relationship, then Jane Street, at that point, they get opened up in a much larger way to information becoming much more public. And we might be able to see what they were doing if they were actually involved in causing dumps at 10 a.m. for the Bitcoin price. Personally, I don't give a flying rat's ass about the guys over at Jane Street. If they go down, fine. If they don't, we'll just have to deal with them later. But it kind of doesn't look real good for them right now. But it makes me hungry, which is why I got oshigood.us online for the Circle P. It's where I bring plebs with goods and services to other plebs just like you who want to buy those goods and services, but you will buy it in Bitcoin, because if you ain't selling in Bitcoin, you're not in the Circle P. And Oshi has what? Well, he's got HODL butter, but not a lot. He's only got like 5 left of regular HODL butter, which, if you don't know what HODL butter is, let me read you the ingredient list. It's ground up pecans, maple sugar, not syrup, maple sugar, sea salt flakes, cinnamon, and black pepper. That's it. There's no preservatives. There's no extra chemistry. There's no artificial dyes or colors. He makes it by hand, and he sells it in Bitcoin, and it's one of the most tasty things I've ever eaten in my life. In fact, because it balances sweet and savory, because it's got that black pepper in it and salt, that's how you kind of balance that. You can use it for a lot more than just, spreading it on a piece of toast. I've seen people put a big old dollop of it on a freshly grilled steak. And honestly, it looks like it's really good. But so he's got 5 left of 16-ounce jars of HODL butter. He also has a version called Crunchy Hodl Butter. I think, is that all that he's got? He's out of everything. I think he's out of everything else that he sells, so I won't talk about them. But go get Hodl Butter over at oshigood.us. Make sure you use code BitcoinAnd, because in this case, it's going to tell Oshi, I made a sale for him here on the Circle P, and he will pay me in sats for whatever he thinks that sale was worth. This is how the Circle P works. It's not a handshake. Well, actually, it's a digital handshake, but there's no contracts. He doesn't pay me up front. I don't get any money unless I make a sale. It's sort of like that. But what I like doing here at the Circle P is showcasing just regular people trying to do something to get out of the rat race. And Oshi has a superior product. Go to oshigood.us and help Oshi live his dream of making the best hodl butter he can make. oshigood.us, use code BitcoinAnd. Pocahontas is in the news. Elizabeth Warren calls crypto bank charter approvals for firms like Coinbase and Ripple illegal. This is Sander Lutz writing for Decrypt. Senator Elizabeth Warren is demanding answers from a key banking regulator that has, under the Trump administration, issued national trust bank charters to crypto companies. In a letter sent Monday to Comptroller of the Currency, Warren argued these approvals violated the National Bank Act and are now posing serious risks to the safety and soundness of the U.S. banking system. Quote, these companies are effectively crypto banks that want to evade the fundamental safeguards and obligations that come with being a bank, Warren said. The OCC has approved national trust banking charter applications for 9 companies, including Coinbase, Circle, Ripple, Paxos, BitGo, Fidelity, Crypto.com, Stripe, and Protego. Since Donald Trump's return to power last year, the Office of the Comptroller of the Currency has approved 9 national trust banking charter applications for crypto-focused firms. In the wake of the passage of the Stablecoin Focused Genius Act last year, numerous crypto companies have applied for national trust banking charters to facilitate the issuance, redemption, and custody of stablecoins and funds backing them, among other capabilities. Stablecoins are cryptocurrencies that are typically pegged to the value of the U.S. dollar. But in her letter to the OCC, Warren said those companies look like crypto banks, not trust companies. Quote, the business plans include language that suggests the companies intend to engage in non-fiduciary custodial activities, facilitating payments and lending activities, and conducting stablecoin activities closely related to deposit taking, she elaborated. Warren requested the OCC provide her with granular information about the crypto bank's approved bank charters and whether the banking regulator allows national trust companies to engage in non-fiduciary activities. She also requested copies of all the correspondence between OCC officials and President Trump and his family and his associates regarding its approval of crypto-focused national trust applications. The progressive senator and the OCC's Gould clashed publicly in February at a Senate hearing when Warren pressed him on the pending national trust bank application from the Trump family's own crypto company, World Liberty Financial. Gould refused to say he would delay or deny the application, leading Warren to go on the warpath and accuse the official of being an accomplice to the president's alleged corruption. The warpath comment came from me. Just saying. It's not the author. I can't help myself. She lied about her heritage. She lied about being a Native American. Yes, I call her Pocahontas. And yes, I will say that she's on the warpath. And yes, that may be a shitty thing to say, but when it comes to Elizabeth Warren, for me, nothing is off the table. She needs to be roundly and soundly denigrated until she is either so embarrassed that she doesn't want to show herself in public in the Senate, or she just flat ass leaves. Because this chick is the most disingenuous woman outside of Nancy Pelosi's orbit I have ever seen. She continuously campaigns to get reelected to the Senate, that she is going to hold banks accountable. But what does she end up doing? protecting the banks. It is very simple. She is bought and paid for, and she lies through her teeth about what her intentions are. She is not against the banks. She is for the banks. And yet she tells everybody every day how bankers are destroying the world. It's disingenuousness at its peak. And I'm just fucking done with it. But Trump isn't going to let her go either, because he's doing something right now that's going to piss her straight off. Out of Decrypt, written by Vince D'Aquino, Trump orders the Federal Reserve to review crypto firms' access to master accounts. Woohoo! Yeah, Elizabeth Warren is not going to like this one. U.S. President Donald Trump signed an executive order on Tuesday directing regulators to study whether crypto and fintech firms should get direct access to Federal Reserve payment accounts, placing renewed pressure on the central bank's control over who can connect to the United States payment system. The order asked federal financial regulators to review rules, guidance, supervisory practices, and application processes that may limit fintech firms' abilities to partner with regulated institutions or seek bank charters, deposit insurance licenses, and other approvals. So Trump is doubling down here. Quote, the federal government must update regulations to allow the integration of digital assets and innovative technologies into traditional financial services and payment systems, Trump stated in the order. The directive also calls for removing overly burdensome and fragmented regulations and supervisory practices that form barriers to entry and primarily benefit incumbent financial services firms, exactly the people that Warren represents. Ari Redboard, global head of policy and government affairs at blockchain analytics firm TRM Labs, called the order a concrete step toward putting the U.S. at the forefront of digital asset adoption. He framed digital asset dominance as an American strategic interest. Well, he also pointed to the sector's explosive growth that has seen stablecoins achieve transaction volumes of $33 trillion in 2025 at a market cap exceeding $300 billion. At issue is how much discretion the Fed should retain over access to its own payment rails. Master accounts are accounts held at the Federal Reserve that allow eligible institutions to settle payments directly through the central bank instead of relying on another bank to move money through the U.S. financial system. The order preserves the Fed's formal independence because it requests for a review without forcing the central bank to grant access, Luke Nolan, senior researcher at CoinShares, told Decrypt. Quote, the pressure is somewhat real, but it operates through optics, not any legal forcefulness, Nolan said. Quote, a public 120-day report deadline puts the Fed in a position where any denial has to be defended out loud, end quote. Concerns about Fed independence are limited, Nolan said, because final authority on master account access still sits with the Fed, and the executive order doesn't change that. Quote, the more interesting concern is, in my view, is the precedent. The White House publicly weighing in on what has been treated as a supervisory and risk management call is certainly different than what we are used to, end quote. Without the Fed loosening its own risk standards, the order is largely just political messaging, Nolan said, though it still changes the process by shifting the burden onto the central bank to explain future denials. As well as targeting barriers to entry and incumbent financial services firms, the order asked the Federal Reserve to evaluate whether or not uninsured depository institutions and non-bank firms, including digital asset companies, can access Reserve Bank payment accounts and services. The move places the question of Fed access formally on the table, says Wesley Rios of the U.S. and partnerships lead at Morph, noting that any real path for crypto firms still depends on whether the Fed changes its access standards and sees enough legal clarity for non-bank firms. The order could also be seen as a sign that master account access is becoming part of a wider policy debate over how crypto firms should connect to core U.S. financial infrastructure. Given its focus on payment access and regulatory integration, the order could indirectly accelerate tokenization by creating a much smoother path for tokenized assets to interact with traditional markets. Dan Daddy Bayo, strategic lead at crypto infrastructure developer Horizontal Systems, told Decrypt. Platforms focused on tokenized treasury, securities, and settlement infrastructure could benefit disproportionately if the review leads to easier links between fintech firms and payment infrastructure. Quote, for most of crypto's history, the industry built systems outside traditional financial infrastructure. This potentially marks the beginning of a different phase from crypto outside the system to crypto inside the rails, end quote. Federal Reserve has already begun granting limited access to crypto firms, with the Kansas City Fed approving a limited purpose account for Payward, the parent company of crypto exchange Kraken. The move came after the Fed's Board of Governors last year's mooted skinny master accounts designed to enable access for select firms, marking a departure from the central bank's historically restrictive stance toward digital asset companies seeking direct payment access. And that's really all we need to know. So Trump signs an executive order to force the Fed to open up a review of their processes for crypto firms gaining access to Fed master accounts. So Caitlin Long out of Wyoming, this is going to be kind of music to her ears, because at least it will force the Fed to make public statements as to what their mechanism is when they're granting master accounts. And the Fed very well may at this point just say, screw it. Let's actually start giving master account access to people like Coinbase and Kraken and all the rest of them at either partial, like these skinny accounts that have the ability to do some things with a Fed master account, but not all the things, all the way up to being able to do all the things. Because Caitlin Long and Custodia Bank out of Wyoming have been trying to get a master account for like 6 years. I think they've sued the Fed 3 times, and they're still in an ongoing debate with the Federal Reserve as we speak. But Warren is not going to be happy. She is not going to be happy. And in a way, this is kind of not helping Trump's ethical situation when it comes to Senator Bernie Sanders and Elizabeth Warren, because he's going to end up having a master account for WLFI, and it's unethical. If he was not the president of the United States at this time, like if he waited to for the Trump family to apply for a master account, while he's telling the Fed that they need to review how they give access to crypto-based companies for a master account, it wouldn't be so bad. But the fact that he's a sitting president, that's going to be an issue, and it's kind of going to help Warren. But she may start getting so pissed off that she starts making mistakes because she's clouded by anger. We'll see. We'll see, because she can get a little hot under the collar, which is... it's one of the only things that I like about her. I just wish that she was on the side of light and not darkness, because as I've said many, many times before, she says she's against the banks. She says that bankers are evil, yet she does all of their bidding and she doesn't even question it. She is a paid-for actor, and it's sad to see. She's lied about her heritage, and she did it to get paid really well by going to Harvard. By being a Harvard law professor. I don't know why she did it. It turns out she is no more Native American than I am. It's like 1/16 Native American genetics, which is honestly, most people in the United States, if your family has been in the United States for like more than 4, 5, 6 generations, yeah, you probably got some Native American blood in you, to the point like Elizabeth Warren does. But you're not a quarter Cherokee, you're not half Cherokee, you're not 1/8, which is what she was saying, is that she was like 1/8 Blackfoot, or I can't remember what tribe she was talking about. Doesn't matter. She lied. That's the point. She lied about her heritage while she was a sitting senator. She lies about her intentions in safeguarding us against the evil bankers while she basically runs interference for those very same bankers. This is why I don't trust these people. Let's run the numbers. CNBC, futures and commodities, oil and energy down in the red, way in the red across the board, because hopes of a United States, Middle East, and Iranian peace deal are being talked about. No actual concrete anything, just a hopefulness that has resulted in Brent North Sea down by 6 points to $104.67 a barrel. West Texas Intermediate also down 6% to $97.85, breaking below the $100 mark. Natural gas, not acting as the hedge, it's down 3% to $3.02 per 1,000 cubic feet, and gasoline is down 5.6% to $3.48 a gallon. Murban crude is also down 4.5% today. Metals are screaming. Well, they're not exactly screaming, but they are in the green. Palladium is up a point. Gold is up half a point to 45.37 and 8 dimes. Platinum is up 0.8%. Silver is up 1.5 to 76.28. And copper is up 2%. I'm going to pause here to say that I don't think the markets are really buying this hopefulness. I think everybody is on pins and needles. And I'll get to that here in a second as to why, but let's do this. Agriculture is all in the red. The biggest loser today is going to be corn, 2.16% to the downside, and nobody's in the green. So the guy that lost the least amount was rough rice. It is in the red by 0.3%. Live cattle down 1.28%. Lean hogs down almost a half, and feeder cattle down over a half. And here's the indices. They're all in the green, but not by what you would expect. S&P is up 0.75%. NASDAQ is up well over a point. The Dow is up a full point, and the S&P Mini is up 1.5 points. Now, that seems like, oh, well, yeah, the equities are doing great. Yeah, but what else is going on here? I mean, I told you that oil is fallen. But you know what else has fallen? Interest rates on treasury bonds. I mean, a couple of really, really deep red wicks. The 30-year is down 1.27%, yielding 5.12%. The 20-year is down 1.5%. The 10-year is down 1.86%. Even the Japanese government 10-year bond is down almost a half point on yield to yield 2.78% on the Japanese government bond. These are steep declines in interest rates, which, as I've been telling you, has been driving all kinds of bad shit to happen. Interest rates on the bonds for the last week have basically been tracking the price of oil, which has just usually been going up until today. So now we've got, well, actually it's still tracking because oil is down and so are bond yields. Yet I'm still looking at a price of Bitcoin at $77,348 a coin. I should be seeing well more than a 500-point gain on the Dow Jones because of this. And we're not. And I think it's because people are like, yeah, we've seen this dog and pony show before. Let's see what actually happens. So this whole exuberance thing seems to have been tempered, which is good. Honestly, I think it's good. I think people should be out there going, wait a minute. I've heard this song before, and it doesn't end well. It usually ends up with, deal's off the table. And I'm talking about the U.S.-Iran peace deal. And I honestly, I was about to say that I don't believe it. I'll believe it when I see it. But up until then, it's just smoke and mirrors. Like I said, the price of Bitcoin is at 77,300 and something. That is a $1.5 trillion market cap. We can get 17.1 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 20,031,000. 851.15 of. Average fees per block are nominal 0.02 BTC, taken in fees on a per block basis. It's about 45 blocks, carrying 110,000 unconfirmed transactions, waiting to clear at high priority rates of 2 sats per VByte. Lows will get you in at 0.6. Hash rate sitting at 982 exahashes per second. So we've gained a little bit of security on the Bitcoin network since yesterday. Oh, an announcement. I am working on the show outline for Cathedral 6. And if you haven't been following the Cathedral series, if you're new to the show, it is a regenerative agriculture project that I'm dreaming up. It's all on paper. I don't have like the land that I need to do it on, but there's this design in my head for a silvopasture, and I've done 5 pieces of Cathedral so far. That's the project is named Cathedral. Because the silver pasture, when I look at it, it just reminds me of a place that literally sings to God. Otherwise, I haven't done anything with it for like 5 months, which is inexcusable. And the next part that I'm trying to outline is, how do we take all the biomass that's coming off of the cathedral lands, convert it into energy and biochar and wood vinegar and all of these goodies, and how can we use the heat to dry the wood that goes into the system in the first place? How do we generate electricity to run Bitcoin miners? How many miners could we run? That kind of thing. I'm working on the outline for this is the carbon group part of Cathedral, and that's going to be the centerpiece for Cathedral 6. And again, I'm working on the outline. I hope to have it recorded and out this Saturday, so be on the lookout for that. If you want to find out more, go to bitcoinandshow.com. That's bitcoinandshow.com. I don't normally talk about my website, which I should, but I don't. But bitcoinandshow.com. Not only does it have all, most of the episodes that I do that you're listening to now, it has an entire section called Cathedral. And you'll see it at the very top of the website page if you want to know more. If you haven't listened to any of the other Cathedral stuff, you can find all of the parts 1 through 5 there at the bitcoinandshow.com website. Now, on to Bond Market Circus's Dumpster Fire, which was yesterday's episode of Bitcoin. And I got 1,000 sats out of Mutum 8. Says, got in late for the May 12th episode, so reposting. A project regarding soft war and non-monetary uses, spaceprotocol.org. Spaceprotocol.org is a Bitcoin-anchored namespace for which I just gave a workshop on at Bitcoin 2026. So, okay, that's kind of interesting. Spaceprotocol.org. Interesting. Progressively Worse with 222 sats says, thank you, no thank you. Nick Dose with 216 says, cheers. Right back at you, buddy. Nostr Gang, as always, says, thank you, no thank you. And if you've got some extra sats laying around, please feel free to boost the show, because this show really does depend on donations. I don't have these handshake deals with like Iron Mining and and Swan Bitcoin or Strike or Square. I don't have sponsors. That's probably my own damn fault because I don't really reach out. I'm more of I guess I'm a little too introverted for my own good. I really would rather the show be supported by the listenership, by you guys. It's like if I could get like 1,000 people throwing me, 1 quarter or like, 10 cents worth of sats a day, shit, man, I'd be able to do all kinds of crap. it'd be nice. I swear to God. So if you got some sats laying around, please feel free to donate them to the show. You can do that on any Podcasting 2.0 enabled podcast app. My favorite is Fountain.fm. We go to Fountain.fm and you can find a link to get to the Fountain app that you can download either on Android or iOS. It is my daily driver. I can boost shows. I can send them messages with the boosts. I can stream Satoshis. It's all Bitcoin Lightning Network enabled. Please consider donating to the show. That's the weather report. Welcome to part 2 of the news that you can use, where Tether acquires SoftBank's stake in 21 Capital as the share price jumps 5%. This is James Hunt from The Block. Tether International has acquired SoftBank's stake in 21 Capital, the controlling shareholder announced on Wednesday. Pausing to say 21 Capital is Jack Mallers' Bitcoin treasury outfit. They do other stuff than just Bitcoin treasury, but this is Jack Mallers of Strike, that 21 Capital. All right, so whatever SoftBank had, they were bought out by Tether. This is interesting. SoftBank's representatives stepped down from 21's board of directors upon closing the transaction in accordance with the firm's shareholder agreement, according to Tether. Quote, the transaction reflects the continued development of 21 as the company builds on its foundation and advances its long-term Bitcoin strategy. Tether's increased commitment reflects its own conviction that 21 represents one of the most important opportunities to build a public company around Bitcoin from the ground up, Tether said in a statement. 21 Capital shares are up 5.6% to $8.05 in pre-market trading Wednesday following the news. SoftBank Group was among the initial backers, including Tether and Cantor Fitzgerald, when Strike founder Jack Mallers was announced as the new venture CEO in April of 2025. Quote, SoftBank's involvement gave 21 the kind of institutional depth that very few early-stage companies ever have. Its experience backing some of the most consequential technology companies in the world brought credibility, perspective, and discipline to 21 during a critical period of formation. They leave behind a company with a stronger foundation, a more clear mandate, and an ambitious path ahead, said Tether CEO Paolo Ardoino. Last month, Tether proposed a multi-step plan to merge 21 with Strike's Bitcoin financial services platform and Bitcoin miner Electron Energy. 21 is the second largest public company holder of Bitcoin, with 43,500 Bitcoin according to the Block's Bitcoin Treasury Tracker. Man, that's kind of impressive. So that's the end of the article. Is interesting. So 21 was started by Jack Mallers and a few other people, and it was backed by SoftBank and Tether and Cantor Fitzgerald, as we just noticed. They got a shit ton of Bitcoin, and here comes Tether, who was one of the initial backers, and decided they wanted even more. And they bought out SoftBank's position in 21 Capital. Again, I'm always concerned with things that are straight up, or not straight up, but mostly Bitcoin treasury companies. Because again, it's like if you're not offering goods and services for sale to the public or to other institutions, then what's your revenue? And that's just an important question to ask. How do you make money? Because yes, technically you can make money by loaning out money, and that's fine. That is a standard acceptable revenue stream, unless you're old school Jewish or Muslim, in which case you're not supposed to take interest and whatnot. But we live in a different world than that. But I'm not sure what 21 Capital actually does. And I think that might be why Tether is trying to say, hey, let's take 21 Capital and fold it into Strike, but also absorb this electron mining company, because at least at that point there's multiple revenue streams, because Strike makes money, and electron mining, ostensibly they make money. I mean, I hope it's not a losing mining proposition, but I don't know. I haven't really been able to look at Electron Energy's books, so there's no way for me to tell. But this does make sense from Tether's perspective, but it kind of begs the question, how much say does Tether actually have over what 21 Capital should or should not do? And if they do fold into Strike with Electron Energy, does that mean Tether is going to have an outsized say-so in what goes on with that particular conglomerate? And would we see Jack Mallers basically taking either a co-pilot position or a straight-up backseat like navigator position against Paolo Ardoino? I mean, is this Paolo or Paolo, or however you pronounce his name, is this a move to capture what Jack Mallers has built? That's one of the reasons why I find this so interesting. I have no idea. I have no inside information as to what this is all about. Still, though, if I back up from it and I stop looking at potential tinfoil hattery, it does make a lot of sense. Let's move on to Bitcoin developer launching privacy-focused Nostr VPN using public keys. This is Zoltan Vardai writing for Cointelegraph. Marty Malmy, an early Bitcoin developer who worked directly with Satoshi Nakamoto, has published a new privacy-focused version of Nostr VPN inspired by Tailscale, replacing email addresses and third-party accounts with Nostr public keys. Malmy said in a Tuesday X post that the new version of Nostr includes a multi-platform interface for managing VPN settings across devices, as well as Nostr-based multi-hop routing that acts as a fallback system when direct peer-to-peer connections fail. The new version uses Nostr cryptographic keys instead of email logins or third-party accounts, reducing reliance on centralized services. The project aims to offer a more decentralized alternative to traditional VPN providers that route traffic through company-controlled servers. VPNs, or virtual private networks, create encrypted connections between devices and the internet to help hide users' IP addresses and general internet traffic. Bitcoin advocate Swiss Hodler called decentralized VPNs freedom tech that makes online censorship more difficult as it helps remove more infrastructure from centralized control. Malmy, also known as Sirius, is a Finnish computer scientist and developer who was known as one of Nakamoto's first major collaborators between 2009 and 2011. Malmy helped design Bitcoin's first graphical user interface, co-managed Bitcoin.org, and co-founded the Bitcoin Forum, which was later rebranded as Bitcoin Talk. Developers have been building more decentralized VPNs to answer the growing user demand for privacy-focused solutions. Zero Tier, launched in 2013 as one of the first privacy-focused VPN solutions that was built on a private mesh network. By 2024, Zero Tier said it had garnered over 3 million connected devices across 5,000 paid accounts and 600,000 network administrations. In 2017, a community of open-minded, or rather open-source developers launched Yggdrasil, a decentralized mesh network that function similarly to a VPN by connecting devices through end-to-end encryption without relying on centralized servers. In November of 2019, Slack's engineering team introduced Nebula, an open-source mesh VPN and overlaid networking tool designed to securely connect computers and servers across different networks and locations. Unlike traditional VPNs that route all traffic through a central server, Nebula creates a direct peer-to-peer encrypted tunnel between the two endpoints. And I don't know why they ended with that without going back to the meat and potatoes of this, a Nostr key-based VPN, a private VPN. This is amazing. And the fact that Marty Malmy is the one that's developed it, and he's developing it with basically the Nostr backbone. People keep shitting on Nostr because it doesn't give you the rage that you require that you're getting from X or Facebook or TikTok or whatever it is that you're looking at that's social media based. Nostr is a protocol. It can be used for social media, but it can be used for a lot of other things. And thank God for somebody like Marty who's coming in and saying, look, we can build a VPN with this shit. There's Jack, and not Jack Mallers, Jack Dorsey from the old Twitter founder, created BitChat, which is also Nostr based. These people see it. Why can't anybody else? All I hear from people on X is how, if they're talking about Nostr anyway, is that Nostr sucks and X is the shit. Have you spent that much time on X? I mean, enough time that you realize that it's just rage engagement. Enragement engagement. That's all this shit is. It finds out what pisses you off and it's easy to find that out. Generally speaking, it's whatever you reply to and whatever you like. It's not hard for an AI to run through somebody's tweet and find out if it's positive messaging or mostly negative messaging. And it's not hard for an AI or even just a general algorithm to run through and say, did he like more positive messages or did she like more negative messages? This is not that hard. And that algorithm basically is basically your profile as far as X is concerned. Nostr doesn't have any of that. It has none of that. You'll have happy posts and neutral posts and sad posts and pissed off posts and brilliant posts and stupid posts. It doesn't matter. You'll get them all. But that's the social media aspect of Nostr. Nostr's a protocol. It's not designed as social media. It's designed as a messaging protocol. What else is a messaging protocol? Oh, the internet. HTTP and all that shit. It is all messages. If you write a blog post on Medium, that's messaging. If you write an X post, that's messaging. If you make a phone call over Zoom or whatever, that's messaging. The internet is just a messaging protocol. Everything that you do on the internet is almost certainly something to do or can be construed as messaging. Nostr is a different kind of protocol. It is also a messaging protocol. However, it is designed as decentralized. It is designed on top of encryption. You can use it to build clients that look like social media, but you can also use it to make VPNs. I'm telling you, man, if you're not looking at what Nostr is able to provide, or if you're one of the people that go, I spent 10 minutes here and I don't get it. Dude, spend 20. And if you still don't get it, spend 30. There's a whole group of people that's yelling in your ear right now that you need to look at this particular protocol. You need to figure out how to use it. All right, I'm just saying. Now let's move on to Canaan. They've won a contract to supply crypto mining heat to Nordic District Heating Network. This is Micah Zimmerman, Bitcoin Magazine. Canaan, the Bitcoin mining equipment manufacturer, has secured a contract to provide heat recovery compute infrastructure to a district heating network in the Nordic region. The data centers on Canaan's Avalon hydro-cooled mining units, which capture thermal output from Bitcoin mining operations, redirects it as hot water into residential heating systems. The units generate water at approximately 80 degrees Celsius, a temperature range compatible with existing direct heating infrastructure. The project is structured around two phases. A first phase of 228 units totaling 2 megawatts of heating capacity is operational and has been delivering hot water to local residents. In March of 2026, the unnamed Nordic heating provider placed a follow-up order for an additional 700 units, expanding total capacity to 8 megawatts. At full deployment, the system is expected to serve approximately 2,800 homes. Canaan's architecture gives the system a technical edge over traditional boilers, according to the company, because the heating nodes run many parallel units that support dynamic overclocking and underclocking. Operators can adjust output in real time to match shifting heating demand. The parallel design also reduces single points of failure risk and simplifies maintenance compared to centralized boiler systems. The selection came through a competitive evaluation process in which the customer assessed multiple solutions before choosing Canaan's equipment for the second and larger phase of the project. The Nordic region is a global benchmark for district heating technology, and governments there have built policy frameworks that incentivize efficient heat distribution across urban networks. CEO Nenzhen Zhang said he took a direct role in the platform's development, including the physical design of the unit's form factor. Quote, "Heat reuse is no longer an ancillary byproduct of compute. It is central to building a more efficient, sustainable energy future and a core part of how we think about system design at Canaan," Zhang said. For Canaan, the contract represents a strategic push beyond its core Bitcoin mining equipment business into what the company calls energy integrated compute infrastructure. The hash to heat concept has circulated in the mining industry for years, but the challenge for generating high-grade heat at a commercial size scale has limited widespread adoption. Canaan positions the Nordic deployment as evidence that the barrier has been crossed. And of course, Canaan stock was down 15% today, currently trading at 40 pennies. It's kind of sad, but it is what it is. Again, we need to start looking at things differently across the board. Like what I was just saying about Nostr as a messaging protocol, not a social media platform. There's two different ways to look at what Nostr is. There's two different ways to look at what heat is. Is it a waste product, or is it something that can be utilized? It depends on our perception of the situation to make the correct call. And the correct call for Nostr is it is not a social media platform. It is a messaging protocol. Heat is not a waste product. It is a useful product. How do we capture it? How do we spend our time because this may be what AI does to us. If everybody loses their fucking job, we start going, well, wait a minute. I didn't really need to worry about heat before, and it's not because I'm poor, because I'm out of, unemployment, because Elon Musk is giving me, basically giving us a basic high income or whatever Elon Musk called it. Let's say that you still got income because of government cheese. You get a chance to sit around and say, well, what would I actually do if I didn't have to worry about this other stuff? Like, I never really gave a shit about heat. And like, let's say you're an engineer. Let's just figure out a way to get the heat as far away from us as quickly as possible for the least amount of money. and not do anything else, not do any other mathematics, not have any other inspiration, not have any other gut feeling that maybe, just maybe, heat might actually be fucking useful. And if I sound a little angry, it's because that's what we do with everything. Gas flaring in West Texas, can't get rid of it, burn it. Yeah, I mean, let's like, my favorite is air conditioning systems in what, let's go back to West Texas. Dude, I can be outside literally in like a 95-degree day, and I can put my hand over the fan of the outside condenser unit of an air-conditioned home, and it's even hotter. I now have a temperature differential. What if I were to wrap a cage around that output air, and that cage was lined with, I don't know, some kind of very loose straw like you might find in, an evaporative cooler. And let's say I put a water pump that pumped water up to the top of that lining and made all that lining wet. And then hot air is now blowing through that lining. And let's say that I did the calculations to make sure that I'm not impairing the output of that fan of the air conditioner, where I've got enough surface area so that the fan is like, I don't feel any difference. I'm pushing as much air as I've always pushed. And all that hot air is now running through wet fiber. What do you get? You get an outside evaporative cooler, and you basically are spending not any more money to operate it, because it doesn't take much electricity to operate a small, water pump, because you're not pumping that much water. That's just a different way to look at heat. That's just a different way to look at these things. Canaan and a lot of people that were like, dude, we can use this excess heat to do all kinds of shit. You got people that are heating homes, heating multiple homes, like in this case. You got people heating greenhouses. You got people heating hot tubs. You got people that are like literally plugging this shit to underfloor heating systems in multi-million-dollar houses. Because heat is not a waste product. Heat is a useful product, and you know how I know that this is true? Think about what happens if the sun shut off. You'd want heat then, wouldn't you? It's time for us to start thinking about everything differently, including market share. Non-dollar stablecoins are struggling to crack even 0.5% of global market share. This is out of CoinDesk. Sam Reynolds is writing, non-dollar stablecoins have grown sharply over the past 5 years, but anything other than a dollar peg stablecoin is just not getting traction. The combined supply of euro, Canadian dollar, Japanese yen, Singapore dollar, and any other non-USD stablecoins rose to about $771 million in April of 2026. That's up from $261 million in May of 2021, according to stablecoin supply data Artemis. But the market share slipped from 0.24%, and that was from a high of 0.26%, leaving dollar peg tokens with 99.76% of the stablecoin market. In traditional finance, dollar dominance is a slow bleed. The dollar accounts for 89% of foreign exchange trade, 61% of foreign currency debt issuance, and 57% of global reserves. On chain, it's the opposite. Rising treasury yields may deepen that advantage. Dollar stablecoins are not just backed by the world's dominant currency, they are increasingly backed by the world's deepest pool of short-term government debt. As yields rise, issuers holding T-bills can earn more on reserves, making dollar stablecoin issuance more profitable and giving large players more money to spend on liquidity, distribution, and partnerships. That treasury advantage is already visible on chain. Tokenized U.S. Treasury debt stands at $15.4 billion, making it the largest distributed RWA category tracked by RWA.xyz. Real world assets is RWA. While tokenized non-U.S. government debt totals just $1.4 billion. In other words, the market for on-chain U.S. government debt is roughly 11 times larger than the equivalent market for every other government market combined. That matters for stablecoin because dollar issuers can plug into a deep, liquid and yield-bearing collateral base, while non-dollar issuers are trying to build stablecoin markets without anything close to the same reserve infrastructure. That reserve advantage helps explain why dollar stablecoins have stayed so far ahead. Issuers need liquid, trusted collateral to back redemptions, and on-chain, that overwhelmingly means short-term U.S. government debt. During CoinDesk's recent consensus conference, Coinbase's global head of stablecoins, John Turner, said the dominance became self-reinforcing early because, quote, it was a liquidity story. If there was liquidity got volume, end quote. Liquidity attracted volume. Volume attracted use cases, and use cases attracted more liquidity. That's a flywheel that non-dollar issuers have never been able to start. There's a simpler explanation for the gap. Most fiat currencies aren't usable outside their home country in the first place. The International Monetary Fund tracks roughly 180 currencies in circulation worldwide. Of those, maybe 8 of them trade with meaningful liquidity in global foreign exchange markets. The dollar, euro, yen, pound sterling, Swiss franc, Canadian dollar, Australian dollar, and the yuan. The rest are effectively onshore instruments by design. Major Asian currencies like the Taiwan dollar or the Korean won are restricted to onshore use only. Stablecoins, however, inherit the international reach of their parent currency, and most of the world's currencies have none. That leaves a working universe of maybe a half dozen currencies, like the euro or the yen, that could plausibly support a globally used stablecoin, but the market doesn't seem interested. And that's the end of the article. Dude, I'm telling you, Tether unlocked the door of what's going to be the greatest debt issuance on the face of the planet, and it is all bouncing in the court of the United States. Not the courts. I'm talking about the tennis court, the play court, the basketball court, whatever you... The ball's bouncing in our court and our court only. And if you think that the Federal Reserve, the Treasury Department, any United States presidential administration, Congress, what have you, isn't going to use that, then you would be wrong. They are going to use it, and they are going to be able to sell the living daylights out of United States debt instrumentation to people around the world. And the people that won't use it, or the people that will use it the least, will be United States citizens. So the chickens that will, and they will eventually come home to roost back in the United States in the form of really bad inflation, won't see it for a long time. We've already got bad inflation. I know, I hear you out there. No, it'll get worse. But in this mechanism, the ability for the Treasury to just print debt, and now they don't even really have to sell it to the Fed, because 6% of all stablecoin usage is USD pegged, which means they're going to go to basically 2 companies, Tether and Circle. And both of those companies are going to be buying United States issued government treasury bonds and short-term short-term debt. And they're going to print more stablecoin to reflect what they just bought. And the Tether by themselves made $8 billion last quarter in net profit? Yet they got money to buy treasury. Yes, I understand. They're not up there at the scale of how other countries buy United States government bonds, or the amount that they buy. But now we're seeing people like Japan sell those bonds. I predict that Tether and Circle are probably going to be two of the largest holders of United States government debt in the world eventually, somewhere. Next year, probably not. Year after that, maybe not. But eventually, and probably sooner than we think. And they're going to be buying it probably directly from Japan and directly from Russia and directly from China and directly from Australia and whoever else was silly enough to buy our debt while they watched us do the kind of stupid shit that we've done as a country. And it's not going to matter because we're going to roll down our merry road doing the exact same shit that we've done, because Tether and Circle are going to basically be buyers of first, medium, and last resort of U.S. government debt. So they can just print all the money they want. And then all that money that they print isn't going to go into the United States first. It's going to basically be expelled to the rest of the world's population. It'll eventually come back around, and it's eventually going to be the chickens are coming home to roost, but not at first. This is like the dollar milkshake theory was actually, I think that was actually theorized before the advent of Tether and before the advent of USDC, which is Circle's version of Tether's USD peg stablecoin. If that is true, if the dollar milkshake theory of basically all currencies collapsing into the dollar, if that is true, that theory came before the advent of Tether, then Tether just threw a whole plane load of jet fuel onto that theory and lit it on fire. Do not expect the euro-backed stablecoin to get any traction. I know Fifi Lagarde and all the people in the Eurozone are thinking, oh yeah, we'll be able to compete. No, you won't. You're done. The Chinese stablecoin, if they do one, you're done. But they actually may have a chance. But Australia, New Zealand, anywhere in Europe, Canadian, I doubt it. Certainly nothing in Africa, certainly nothing in South America or Central America. You can forget about that. This is all United States, baby. And we are going to print like mad. And hopefully, I'll still be able to see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.